Hi there, welcome to Kneppy Invest and welcome to August the 27th, 2024. We have about 1 hour and 45 minutes left of trading today. That includes the closing auction. And just looking at how all the indices have performed today, no real big surprises there. Tech and small caps, a little bit weaker, which is understandable because the Nasdaq was down by more than 1%. But the Dow Jones was actually up 0.16%. And mining's had a good day as well. Up one, well, not as well, the only really sector to have a good day, up 1.6, well, indices. I don't know about the sectors. We'll have a look at that in a second. But resource up 1.63%. So more than likely, the reason why the ASX 200, possibly even the ASX 20, is having a relatively good day today is because of mining companies on the ASX. And we are, well, the ASX, particularly the top end of town, is dominated by finance and mining companies. So BHP, Woodside both released results today, and I'm pretty sure both of those company share prices are up. Otherwise, I'm not sure what has led this resource boom today. Maybe it's continuation in the uranium trade. Maybe it's iron ore up again. So Fortescue, Rio Tinto, BHP. Maybe energy's had a good day, which uranium is a part of. Okay, so the agenda for today's video is I'll go through the ASX today like I always do, look at the best and worst performing sectors, indices, and also companies. And then we'll have a look at some of the companies that have released results today. I have, for the first time ever, I have actually set up an Commsec watch list of all companies, well, maybe not all companies, because this particular watch list, I don't like their beta watch lists. So you can launch a new watch list, which has no limitations of how many companies you can include in the watch list. But the non-beta watch lists can only have, in Commsec, can only have 35 companies within it or stocks within it. So I have filled this up, this particular watch list of companies that have released results today. It is filled up, 35 companies. So I have left out quite a few companies. It just shows you there are a lot of companies releasing results. And if you just have a look at the percentage change of companies that have released results today, you can see a violent movement in some of these companies' share prices. For instance, Lyng Group down 24.78%, Austin Engineering down 12.7%, Lovisa down 13.4%, Nanosonics up almost 20%. In fact, I own 3 of those 4 companies. Electro Optics down 13.1%. I also own some shares in that company. What else? Zip down 8.3%. SG Fleet down 7.6%, which is interesting. We'll get to why it's interesting. Helloworld down 6.3%. Mayfield Group down 15.8%. This AAL is a recent listing on the ASX. Alfabs down 7.4%. Oh, it just keeps on going. Supply Network released results after closing yesterday, up 5.6%. I hoped it was down 50% and they would have taken position in that company. Droneshield also released results, down 9%. I've also got early pay here because share price is up 8%. So I'll go through some of these companies when we look at the results today. I'm trying to think if there's any other company that did not release results today that did release some good or bad news, and I can't remember, although I will give a Kalina Power update. In fact, I'm going to do that first before we get to the ASX today. So let's have a look again at Kalina Power. Share price of this company was up 120% yesterday, and they did do something naughty when they released their results. And that's why there's no trading in Kalina Power right now, and that's why there's no buyers or sellers. Shares are suspended, and they have to address the problems ASX found with their announcement. So the company released their announcement at 8:26 a.m. yesterday. Kalina executes MOU with US data center developer, and then shares were paused at 1:11 p.m. So we are talking about 3 and a bit hours after this trading began, and they were put in suspension at 2:39. So why were shares in this company suspended? Well, ASX, you'll notice this in the suspension. I thought there was a good chance it had to do with their announcement. But when I saw the shares were immediately suspended, I thought, oh, this is pretty negative news in regards to the announcement. And more than likely, ASX are not happy with Kalina. And that's exactly how it plays out. So this is the reason why they are in non-compliance with a few of their rules. Well, at least one of their rules. Okay. Trading in the company's shares were halted at 1:11 p.m. under ASX Operating Rule 3100, which I have no idea what that is. You could Google. Sometimes when I don't know what something is, I just Google it. I'm not sure why there it is. Google ASX operating rule 3100. You go through this if you really, really want to. I'm not going to do that right now. To ensure that the market in this company shares are fairly orderly and transparent, this is the most important part, second or third paragraph. ASX required Kalina Power to provide specific information for release to the market under Listing Rule 3.1b in relation to the MOU with a well-capitalized US-based data center developer, referenced in its 26th of August 2024 announcement. Now, I'm not sure what they didn't release. It could just be the name of the US-based data center developer. That's all it could be. And there is a possibility that this particular data center developer said, no, you cannot include our name. And Kalina Power was like, oh, the ASX wants us to do this, but the company doesn't want us to do it. And I think their decision was, well, I don't know. I'm just surmising the decision-making process they went through. But I'm pretty sure they would have or should have known that, particularly if ASX told them, that the information in this particular announcement was dearth of the information required by the ASX. So Kalina Power failed to comply with that requirement. As a consequence of them being naughty, Kalina Power securities will now be suspended from quotation under Listing Rule 17.3.1 under such time as ASX is satisfied with Kalina's compliance with the listing rule. So I'm not sure what's going to happen with Kalina Power. Share price up 120%. It could now drop, maybe 50, 100%. Who knows? This has happened on occasion with other companies on the ASX over the past few years. I'm trying to remember some of them. AVA Group. Trying to remember some. Definitely AVA Group, but there has been quite a few companies who have released an announcement, and the ASX came back and said, no, we don't like this. No, it's not in compliance. And you can see here, issued by ASX compliance. The one interesting thing is, why did the ASX allow this announcement to be released? So I think there is a bit of a solution that the ASX can go through any announcement and see if it does comply with their rules. And then if it doesn't comply with their rules, they knock it back and tell the company, hey, you have to fix this up, or not release the announcement at all. So maybe then the market or the shares in the company can be halted. I'm not sure the solution here. That's up to the ASX. But I have seen this happen a few times now, and I'm just surprised it can happen. Anyway, that's the Kalina Power. A bit of an update there. Now let's turn our attention to the ASX today. Look at the best and worst performing sectors. Well, that's interesting. I'm on the ASX news page. Now I'm on the front page. And it's interesting just by looking at this particular graph, which features the XAO, XJO. Not sure why they have the XAO and XJO, because they overlap almost perfectly. Maybe they can have another one here. I don't know. But they also have the XTX. And you can see through the day, all three indices have dropped. Possibility that the American markets or the American futures are down or been falling. I don't know. Anyway, a little bit of weakness in the Australian stock market today from open. Anyway, let's have the sectors. Look at sectors, energy and materials. So the two mining sectors, really good day. Energy up 2.68%. I know Woodside is up. So let's have a look at other companies within this sector. So Woodside's up. I'm assuming oil has had a good day. In fact, let's verify that. Yeah, oil's had a couple of really good days, up nicely, about 2.9% overnight or the last 24 hours. So yeah, definitely I can see some of the other energy companies on the ASX like Santos in the ASX 20 having a pretty good day. So let's have a look. Yeah, Woodside's up 4.3%, Santos up 2.1%, Whitehaven Coal up, Yancoal down. Yancoal has just been absolutely hammered. Absolutely hammered when they suspended, ever since they suspended their dividend. It just shows you how obsessed Australians are with dividends. I'd say this company is getting towards a point where it's probably pretty good value, really good value, but still people just want to sell because you're not giving us dividends. How dare you? And I think it's only for a half year. I don't know. Anyway, I think it's probably pretty good value in Yancoal right now. But anyway, down she goes, down she blows. Interesting enough, as you go a bit further down, we're getting to fairly small markup. So the energy sector today has really been led by Woodside and Santos. Both of those companies up a fair bit today. So obviously, Woodside's half-year report was liked by the market, which is interesting. And I might talk. No, in fact, I'm going to do both of those. I'm going to do Woodside right now. I did not have a look at their results. I don't know. I'm pretty sure it'll be here somewhere. Here we go. Woodside shares rally as half-year results beat estimates. There we go. So the results were better than expected. Let's have a look to see if there's any estimates here. How much did beat estimates? So you can see here, everything fell. 14% drop in underlying profit, after tax profit. And 19% slide in first half revenue to 5.9 billion to the natural decline in some of its older oil and gas fields. But not as bad as expected. Now, they don't go into explanations there. Maybe this next bit will. Okay. Yeah, they just say it's higher than analysis consensus estimates. Jard Analysis noted that the result was roughly equal to some updated inline financial guidance that Woodside gave last week. But the market liked it. So let's have a look at the chart. Is this a breakout? Exactly what I'm looking for every single day on the ASX. And I'm not necessarily there right now. You can see the share price is still in downtrend. And on occasion, you have these little rallies in the share price, which is very natural. When the share price is in a downtrend, you have these little rallies, but those rallies need to show some strength. The other thing I'd be looking at here is any volume on these little rallies, and we're not really seeing it on even today, just today, there's not a lot of volume. So I'm saying this is a fairly weak rally with Woodside Energy. Materials had a good day. I would say that's also been led by BHP. BHP share price was up, and I'm pretty sure their results were treated well by the market. Well, it was treated well by the market because the share price is up. So we know that straight away. So let's have a look. There's BHP. Fortescue and Rio Tinto are both up as well, which probably tells us that iron ore had a good day. So BHP share price is up a little bit more than Fortescue and Rio Tinto. So maybe BHP share price rally is more related to the iron ore price, not their results. And other mining companies had a good day too. Northern Star, South 32, and some non-mining companies in here as well. James Hardie. I'm not sure if I'd call them a materials company, but that's not me to decide. Okay, so let's have a look at the worst performing sectors, and it's no surprise IT is down. No surprise at all. So I would assume right there, or with this one down by this amount, that WiseTech's had a bad day, and probably because it is by far the biggest tech company on the ASX. And it's not down by much, but 0.54%, and everything else is down. So if you have a look at this list of IT companies, they're all down. The only company that's had a good day is Objective Corporation, and I own that company, so I'm happy with that. But all companies are down apart from Objective and Gentrack, which is flat. So again, this is because of what happened on the American markets, in particularly the NASDAQ. It was weak overnight. So no surprise there, to be honest with you. Otherwise, industrials, financials, telecommunications, and discretionary have all had negative days, are down by over 0.5%. Let's have a quick look at the ASX 20. So it's flat, and sort of been a fight between the financials. So I'm assuming all the banks are down, and the mining companies and the energy companies. So let's have a look. I'd say 10 up, 10 down. 13 down, 7 up. So shows you there's more strength, or the companies that have risen today are bigger than the companies that have fallen, or they've risen by a greater amount than the companies that have fallen. So let's have a look. Yeah, so you do have, Woodside up 4.4%, BHP, Coles, Fortescue, Rio, Guzman Group, and Aristocrat all up a fair, well, can't really say Aristocrat's up a fair bit, only up 0.11%. But all those other companies are up by over 0.77%. On the flip side, a lot of these companies are down. So banks, so a few of the biggest companies on the ASX are down by over 1%. NAB and CBA. I'm wondering also if some of those companies have gone ex-dividend, although I'm pretty sure CBA has gone ex-dividend quite a few days ago. Let's have a look. When did they go ex-dividend? 21st. So we are talking about 6 days ago. And I doubt NAB wouldn't have gone ex-dividend because they haven't reported. They report out of cycle, don't they? So yeah, they will go ex-dividend in November. And otherwise, yeah, no big shocks here. So not a shocking day. Not really a shocking day until you get to those companies who have released results. And this is where you get a lot of volatility when it comes to share prices. And I'm just going to show you just one capital brief, a little blurb here. Where it is. SG Fleet shares rise on financial year profit boost special dividend. That was released at 11:35 a.m. And I saw that. I went, oh, SG Fleet's up. And then I went, have a look. SG Fleet Group share price down 8.5%. So I have seen this on occasion when a news media site releases something a little bit prematurely. It's usually Motley Fool releases something like at 10:10 a.m. and the share price is up 5%, and go, why is this company having a great day? And then you have a look at the share price and it's down 20%. They probably did that with Appen yesterday. Why is Appen's share price up 10% today? And actually, it was up 20%, I think, at one point. Maybe. Anyway, that's another story. But anyway, SG Fleet down 8.5% after being up initially. It opened at 340. So it did open up about 4-5% higher on the day. But obviously, a little bit of negative reaction to these results. Okay, so what I'm going to do, actually, no, is go through the top gainers. I thought I'd just finish this for some reason. So what I'm going to do now is go through the top performing companies and the worst performing companies on the ASX today, which is what I always do. Most of these companies, I don't remember releasing results. Bass Oil, they released results a few days ago, so I don't think this is necessarily results driven. Oh, but they did release something today. Kiwi One demonstrates strong initial results from EPT, and they haven't released results at all. There you go. So let's have a look at Bass Oil. Now, is this the company that is going to delist or wants to delist? Let's have a look. Not seeing it. So maybe it's another company. There is one company sort of like this that is wanting to delist, but it may not be Bass. Maybe it's Byron. It could be Byron Energy. Let's have a look. I'm sorry, I'm going a bit of a tangent here. Byron Energy. Maybe it's already delisted. Byron Energy. Well, what is Byron? Byron. I'm pretty sure it's Byron Energy, ASX. BYE. They're gone. Have they gone? There you go. Maybe it was BYE. Anyway, so Bass Oil have released something interesting today that the market likes. Let's have a look at their chart just to see if this is exciting. And it's not a bad. I don't mind this. Really big volume coming in today. The only thing I would say that is negative is the share price is near the low of the day. That is a bit negative. So we have seen a little bit of selling pressure today. So not the best looking one-day candlestick. But if you look at all the other stuff, they released an announcement. Share price is at almost a one-year high. We'll say it's a 9-10 month high. Really big volume coming in today. So maybe one to put on your watch list if you like this sort of thing. I'll put this in my high volume spec. I don't know if this could be considered a spec company. I'm pretty sure they do have a little bit of, let's have a look at their Appendix 5B. I'm assuming they have a little bit of, they are in operations. Yeah, they are selling stuff. Are they cash flow positive? Free cash flow positive? Let's have a look. No, slightly negative. Not a lot of receipts, by the way. So it's a fairly small oil producing company that is just slightly operating cash flow negative. Anyway, let's move on. Most of these companies are small. Levoto Resources isn't, but that share price of that company is all over the place. I'm pretty sure it featured heavily on the best performing companies recently, and you can see that by the chart. Yeah, so yesterday it was down 20%. Today it's up 26.6%. So I'm not going to discuss Levoto Resources right now because it's probably a bit of a plaything for day traders. We also have NextEd, Cleanspace Holdings. This is one company that I did not put on my list of companies that did release results today. Up 21.21%. I'm assuming these results are better than expected. So let's have a look. A quick look at Cleanspace Holdings up 21.21%. Not a lot of volume, so maybe that increase in share price should be treated with a bit of skepticism, maybe. And I did have a very quick look at these results, and I moved quickly on to the next one. So there is a little bit of growth, revenue growth of 30%, but the company is not quite profitable just yet. Still negative. So revenue in the second half up to 8.4 million, but operating EBITDA down. In fact, I don't even mention profits here. So the company, they do mention cash break even and positive EBITDA achieved in Q4. So possibly they are very close to that inflection point, and possibly that is what the market is seeing. That's what the market looks at. And they're also releasing new innovative products that will drive growth in 6 priority markets. So possibly I'm being a little bit too harsh on Cleanspace. So let's have a look at the chart for this company. CSX, I'm just going to write this down. Actually, I did write it down earlier, but anyway. CSX, that's the wrong CSX. I keep forgetting that just because it is a ticker on the ASX, there's other CSXs in the world, like CSX Corporation or WTI Financial Futures. CSX Corp in India, and Cleanspace Holdings. There you go. Okay. Share price all over the up and down like a yo-yo ever since they released something on the 19th of July. What is on the 19th of July? Let's have a look back in time. 19th of July, a response to ASX query. They did release sales update on the 16th of July. Not sure what caused this. Maybe delay reaction from the 16th, because on that particular day, share price did rally 19%. So there is signs here that things are turning around for Cleanspace. And I don't think the market cap is that high. So right now, after this rally, the market cap of this company is 31 million. I think about 4 years ago, just after COVID-19, the market cap of this company was 600 million. So they did go through a period of significant, like hurricane-forced headwinds for a period. That's why the market cap is really low. So this is a possible turnaround for Cleanspace. There's Nanosonics, but I'll talk about that company later. Secos, striking. Okay, so there could be Strike Energy up. I'm just going to have a look to see Strike Energy. No, I'm going to move on. I'm just going to have a look at market cap. Regis Healthcare, this was a possible trade. They released results yesterday. The market didn't react that well, but let's have a look at the chart for Regis. This has been a possible buy for a while. A beautiful uptrend, and I've been thinking, maybe I should take a position in this company. Nice dip back in the start of August. Share price went down to 380, almost 380, and now share price has increased today. So this is sort of a delayed reaction from this company's results that did release yesterday on the 26th of August. So that's interesting in itself. Strike Energy, I don't know if that company released anything today. I don't remember, but an Erigala Deep 1 update. So obviously the market's like that. I'm not going to even open it up because most likely it's just going to go over my head. Let's have a look at the chart for Strike Energy. And the answer to that, any questions that I did not mention just then, the answer though is no. Not interested in that chart at all. Otherwise, Main Pharma, they released results last week. A nice reaction. Plant-Side Studio share price is all over the place. Coast Entertainment Holdings. Findi did release something today, up 7.7%. I did not have a look at this particular announcement, even though I am a shareholder. It did sound positive. Findi secures new merchant deal with Central Bank of Ireland, but I want to see if there's any numbers. Okay, so no numbers in this at all. Maybe they're just talking about contracts for ATMs, that sort of thing, but no numbers. Typically, when I don't see numbers or financial numbers, I don't really get that excited. But the market is excited, and Findi's up 7.7%. So let's have a look at the chart for Findi. And no, I don't see any problems with this chart at all. There was a really big dip here. I'm not sure what caused that. It could be just a couple of shareholders getting out. I don't know. And it seems like it has found a bottom and is trying to rally again. But a lot of volatility, a lot of big down days, big up days. At this point in time, the last 2 months, there's been more big down days than up days. But generally, since this time last year. There's been way more big up days than big down days. So that's Findi. Calix released results, but I'm not going to have a look at it. They're not profitable, but they are growing. Visan had a couple of down days after their results. Now an update. Not sure why people were selling, to be honest with you, though I'm a shareholder, so I'm a bit biased. And my friend who likes Andy and Silver is having a good day. Share price of that company up 9.4%. And I'm going to end it right there. Or Pioneer Capital or Pioneer Credit's up. I'm happy with that as a shareholder. And Early Pay release results up 8.33%. Okay, let's have a look at the worst performing companies. We're going to see a lot of companies in this. We've already mentioned where we saw Johns Lyng Group down, Lovisa down, and a few other companies down as well, pretty big. So we're going to see quite a few companies down here. And there is Johns Lyng Group down 25%, the third worst performing company on the ASX. That is a big company, market 1.16 billion. So market has not like those results. And I'll tell you why. I'm a shareholder, by the way. I'm a shareholder. I'm not selling on these results. So I think this is more of a short-term issue, possibly. And I actually am or was disappointed when I saw not their results. It was more their outlook for financial year 25. I saw that outlook and went, oh, wait. I just held back a bit. Mayfield Group, again, they released results, and I think the market is a little bit overreacting to those. Nice growth. Profit fell back, but there's a reason why profit dropped. It's because instead of paying taxes, they get tax credits. And last year, they got a much bigger tax credit than this year. So if you take that tax credit away, their profit actually went up, not down. So I think there is a misread in Mayfield Group's financial report. And I do think there is potential that company is going to grow significantly. Chart doesn't look that bad, even with this drop. Yeah, it doesn't look bad. It's still in an uptrend. And what else do we have here? There's Lovisa and there's Electro Optic. So, and then Austin Engineering, company called Farmex Technologies, down 12.5%. I had a quick look at that company because they're profitable. And I went, oh, a profitable company. A profitable small cap company that I've never had a look at before. But the market hasn't liked it. So that's intriguing to me. And so let's have a look at their financial year 24 results media release. Might have to have a look at their presentation. Did they release one? The other thing I'd like to say is, like Farmex released their results, like a media results, their annual report, Appendix 4E, and also investor presentation. I just wish other companies, particularly small companies, did that. Mayfield Group just released the annual report and their preliminary final report. No media release, no presentation. You need to do that sort of thing. You are a publicly listed company, publicly listed company. Now it's down 19%. Yeah, so you can just see, all you need is a little bit of buying and the share price will go up 15, 20% because not a lot on the sell side. So this is, sometimes you do see this for illiquidly traded companies, but for me, this is more of a longer term hold. So I don't care if the share price is down because if you have a look, the share price fell down to almost 60 cents back in June. So you're going to see this sort of volatility in this sort of company share price. But I don't think the results were that bad. They weren't bad at all. They grew revenue. They are growing their profit. So I think this is just a lack of understanding by the market on the results. I know. And all you need is a few people who don't understand it, who just sell, panic sell, and you can send the share price down a fair bit. Because don't forget, there's going to be some people who do put stop losses in. And if you panic and sell, some of those stop losses might be hit. And it can be a cascading effect. More stop losses are hit, more panicking, that sort of thing. I think there is potential that's happened to Mayfield Group today. Because there's nothing surprising in their results, by the way. Nothing surprising. They actually virtually mentioned their results, I think. Anyway, Farmex, underlying revenue, 6.7 million. Underlying EBITDA, 1.8 million. Underlying profit, 0.5 million. Underlying operating cash flow, 2 million. Cash on hand, 13.1 million. And all that increased. But they did a divestment. But again, I have no idea about this company. I've never had a look at Farmex. The very fact they divested something. Farmex is, it's really funny, is Australian-owned, publicly listed company. Yeah, we know all that, except the Australian-owned bit. Dedicated to advancing healthcare through transformative technology. It tells you nothing about your company. Well, sort of does. That's wrong. It does. What do you do? Okay, so I won't read that now. Share price is down anyway. Let's have a look at some more bad performing companies today. Let's have a look by market cap. So we have Lovisa, Zip, Deterra. I reckon Deterra's gone ex-dividend. Let me have a look. I'm assuming that's right. Ex-dividend, 27th of August. Dividend price was 14.4 cents, and share price is down 22.5 cents. Yeah, it's probably understandable. So those sort of top losers can be ignored. But otherwise, IPH, maybe ex-dividend. Although the share price has been on a rally recently. Ex-dividend, there we go, ex-dividend today. So either these companies have gone ex-dividend or they released bad results. So we also have Johns Lyng Group, SG Fleet, Droneshield, Smart Group, again, maybe ex-dividend. Can't even remember this company releasing results. No. Or it could be because SG Fleet. Could it be as simple as that? I don't know. That's interesting. Could there be sort of a flow-on effect? Australian Clinical Labs, what's going on there? Down 6.7%. Did they release anything today? Nope. How's Helios doing? It's up. Okay, so there's no link there. I thought maybe Helios or Sonic Health have had a bad day. Helloworld, Austin Engineering, Electro Optics, Race Ecology released results, but I don't care about those results because I don't think they have any revenue or anything like that. Attention's been all over the place. Money Me's had a little bit of a dip. Could be getting interesting. If it dips a little bit more, might add to my trading position with that company. And we have to also see some lithium companies there as well. Okay, so let's get to results. What will I do here? This is my bit of uncertainty here. So what I might do is I'll have a look at some of these companies whose share price is down a fair bit. So we won't have a look at Tourism Holdings or Vulcan, SiteMinder, no, Johns Lyng Group. What I could do is start at the best and work my way down. Won't go through all these companies because some of the reactions are fairly flat. Or maybe I should start at the worst. Yeah, I'll start at the worst. Johns Lyng Group. Okay. Let's open you up. Johns Lyng Group. So I am a shareholder. So, and the other thing I probably would say here is when a company does release results and I don't like him, I don't want to sell straight away. On open, share price was $4, went to a low of 371 fairly quickly. It's actually rallied during the day. So it's more near the high than the low. And I see this a lot because a lot of times the market does overreact on the downside. You sometimes see it on the upside, but definitely on the downside, the market does overreact. Now, in saying all that, I didn't like these numbers. Now, we're talking about flat growth. This company has been priced as a growth company the last few years. And I think the market is sort of recalibrating how it views this company from a growth company to more likely a mature company that's not going to grow much and maybe will have some nice dividends in the future. So very little growth. But it wasn't really the very little growth. It was more, and I'm really going to ignore the CEO's, any of his comments, because if you just read his comments, they had a really good year. So we are very pleased to deliver results for the financial year 24, which demonstrate the strength of our defensive growth strategy, even though they haven't really grown. They're also trying to grow in the United States, which can be a tricky thing to do. So I went through this and I was like, oh, okay. But it's more like the financial year 25 is the most important thing when it comes to Johns Lyng Group, because these results really weren't that different from expectations, I believe. If I can get this here. Pretty sure it was, although it does say he reported softer than expected full-year results. I thought they were very close to full-year results. But I'm... this is what Citibank said, or Citi Analysis says. We are surprised by weakness in the business as usual, BAU. So they have two sections. BAU is business as usual, and the other section is CAT, which is, I forget what that stands for. That's non-business as usual. That's like disasters, that sort of thing. So something in disasters. Catastrophics and disasters, maybe catastrophes, catastrophes and disasters, maybe. Anyway, that's business as usual. And anyway, particularly given it is a miss compared to JLG's guidance. And this is, I thought this was more based off financial year 25. They do mention here, while John's League Group is guiding to a higher business as usual margin in financial year 25 versus expectations, we think the market is likely to be disappointed by the extent of BAU's revenue growth implied by guidance. I thought that was the most disappointing thing about this release, was the guidance was flat, no growth at all. In fact, very little growth. So overall, the company is going to have revenues very similar this year. In fact, their expected EBITDA is going to be smaller this year than last year. And I thought, the market's not going to like this at all. And it hasn't at all. Is this company at fair value? That's probably something I'm going to have to go through the next few days. Now, interesting enough about this company, if you have a look at the chart was looking weak just before this. So share price has been going sideways for a long time. So I've held this company for years. In fact, I'm going to have to adjust this. And I was thinking, the chart was looking pretty weak, and I was thinking, maybe I should just sell. The chart looks weak, and I could just buy back in when the chart starts to turn around, because there's no trend. Share price, in fact, if you actually squint at this, maybe not even squinting, you can see a very weak longer-term downtrend. And I think that weak downtrend has now been confirmed today. So the market was not really liking the prospects of John's Lyng Group leading into these results. But who knows? The market could have liked the results and share price could be higher. But even if they liked the results, because of the downtrend in the share price over the last 6 months, and I think even on the results in February, share price dropped 13.2%. So that could have been the catalyst. That should have been a catalyst to get out, I think. So disappointing results released in February. The share price wasn't in an uptrend, by the way. So those results really disappointed the market. And now the share price has dropped to levels this company hasn't seen since 2021. Since 2021, yeah. June 2021. So 3-year low for John's Lyng Group. And mostly it's just, in my opinion, it's mostly the weak forecast or guidance for financial year 25. But the thing is, just imagine this company has the world has a lot of disasters. This company will benefit from that, natural disasters. This company will benefit. Anyway, so have a look at John's Lyng Group. Maybe there's still not value in this company. I just remember a few years ago, the P ratio of this company was like 50 or 60. It's definitely not there now. I'd say maybe the P ratio is at 20. Maybe before these results, the P ratio was 33.39. So I'd say there is a chance it's closer to 20 now. So the question is, will this company see growth over the next 5 years? I'm unsure. So that's John's Lyng Group. What else? Mayfield Group won't. It's down even more now. So people keep selling. I still think this is just panic selling at the moment. Panic selling. I'm going to show you Mayfield Group. Why not? And there was no surprises. So I think what happened here, and this is why a presentation and a media release can be really beneficial, because people might have just seen these results and went, oh, so revenue up 10%, but profits down 12%. That's horrendous. But all you had to do, so same dividend, net tangible assets up, so everything else is looking pretty good. And all you have to do is have a look at the annual report. And of course, this is going to take ages. And it's all to do, the reason profit's down, it's all to do with tax credits. It's not the performance of the company, it's tax credits. Now, I am biased here because I'm a shareholder of this company. But the question is, would I be willing to add to my position? And that's an interesting question. So I'm pretty sure they probably would have mentioned it somewhere in the annual report. But this is, again, why you need to do a presentation. You are a publicly listed company, and I think it's something you should always do. You should always do that sort of thing, a presentation and a media release. Not the cash flows. Oh, by the way, cash flows. Operating cash flow, $16.1 million. Or positive $16.1 million. In fact, the free cash flow for the company was $15 million. Now, that's to do with changes in working capital. So changes in working capital, by the way, all you have to do is go to the balance sheet, which is somewhere here. Where is it? Here it is. Have a look at trade and other receivables, inventories, trade and other payables, and there was a significant decrease in trade and other receivables. So that is beneficial to the cash flow. So when you see that significant decrease in or increase, depending on what you look at, it can be beneficial. And that probably is beneficial. That changes in working capital was beneficial for the cash flow. But this company is flush with cash. They mentioned it in a release not that long ago. They're flush with cash. So they have $16 million of cash, increase from $5 million this time last year. So let's go to the profit and loss statement. Here we go. So revenue up nicely. It's a nice 10% increase in revenue. And if we go down, so the other thing I like to look at here is any sort of one-offs. And it doesn't seem like there's any one-offs because you can sometimes tell if it's a one-off if you see no number in one of the columns and then there's a big number in the other column. So there's none of that. But, well, that's the wrong one. No one-offs here at all that I can see. Anyway, so profit before income tax benefit, 4.8 million. Now, that increase was above 10%, by the way, from the profit before income tax benefit last year. So, in fact, I'm going to do the mathematics right now with my calculator because I'm not smart enough to do it in my head. Oh, where's my calculator? There it is. So, we are talking about an $855,000 increase divided by 3,904. We'll just say 3,900. So, that increased 22%. So profit before income tax actually increased 22%. But look at the income tax benefit. Last year, they had almost a $2 million income tax benefit. This year, that benefit was only $341,000. Hence, profit after income tax benefit actually dropped. So I'm pretty certain of this. Maybe not certain. I could be convinced otherwise. But I'm pretty sure some people just looked at this and went, oh my God, profit's down. I've got to sell. And that's had an effect on the share price. But when the market does overreact, that does lead to opportunities if you like a company. So this, for me, is more of a longer-term trade because there are tailwinds behind this company. They've even mentioned the tailwinds, and I do think you're going to see some pretty good, potentially some good growth in this company. Anyway, so some panic selling, share price down to 21%. A bit of a surprise to me, to be honest with you. I thought the market was a little bit more savvy than that. But again, Electro Optics are down 12.3%. I'm not going to look at these results. I'm just going to look at the chart. They're loss making. So again, it could be just, oh, the market saw it's a loss. Oh my God, we're going to panic. But this is Electro Optic Systems. You have to understand this company a little bit more. So let's have a look at the chart. This was half-year results, by the way, not full-year results. And if you have a look at the daily chart for Electro Optics, it's all over the place. So I would say right now there's no definitive trend in the share price. You could have argued the share price was in a bit of a short to maybe medium-term uptrend, and maybe this day has put an end to the positive sentiment in Electro Optics. So let's move on to the next bad-performing company, Austin Engineering. This one's an interesting one. So a lot of these share prices going up or down could be just how the results compare to expectations or any sort of guidance. Now, on the surface, Austin Engineering's results look pretty good. So here we go. Austin Engineering, media release, presentation, corporate governance, sustainability report, Appendix 4E, annual report. Anyway, in my opinion, no company has any excuses when it comes to presentations and media releases. It's the least it's not the least you should do because you have to release these documents that the ASX requires, but those documents the ASX doesn't require you. I think the least you have to do is presentations and media releases when it comes to results like these. Financial year 24. So if you have a look at one little bugbear I do have here, I think they do a table. Yeah, they do a table. I would just like a better table. Oh, why is they're just lagging now? So this table has last year's numbers and this year's numbers, no percentage change. What I want is 3 columns. Last year, at least 3 columns. Last year or this year, and then a percentage change. There was one result I saw. I forget which company it was. Which company was it? They did that last year's, this year's, and the percentage change. But in the earnings per share, instead of percentage change, they just went total change, which was 12 cents. I remember that going, why not put the percentage change there as well? Which company was that? I might talk about it, maybe. I wish I remember which company that was. It was a little bit annoying. Oh, it's a company I own because I remember thinking, why? Which company was it? Was it yesterday? I just want to show you it because it's just interesting. I might have a closer look. Maybe I'll look at it tomorrow. Oh, I think I know who it was. Maybe it was GNP, Genus Plus. I could be completely wrong with this, but it could be this one. No, it's another one. Anyway, that's going to bug me for a while now. I just remember there was that column, 3 columns, exactly what I want, and then they had a percentage change. But the last was not a percentage change; it was just a change, not a percentage change. Anyway, I am diverting away from my plan, but yeah, I just like it. I like tables because they're clean, but everything looks pretty good with Austin Engineering. Why is this moving? Stop moving! Stop moving, mouse. For some reason, there's a delay reaction. Anyway, so it looks all pretty good. I had nothing. I'm not a sharer of this company, but I do go through some of these results, and I was thinking it looks pretty good. Even their financial year 25 guidance looks pretty good. So they are expecting some nice increases in revenue and EBIT. So I thought, okay, I think the market's going like this. Share price down. Just shows you that even if you think the results might be good, the what's the ticker code again? ANG. The market might view it differently. Uh, there has been a nice little recovery though. Share price went as low as 46 cents. So if I was paying a little bit more close attention, maybe this could have been a buy. But maybe the uptrend is over for Austin Engineering. So we have a couple of red ticks here. Higher volume. Share price is down significantly. Results. So this could be a negative or a bit of a change in sentiment and trend in the share price for Austin Engineering. What else do we have here? Lovisa. Lovisa is interesting. So down 12, it's recovered nicely. So share, again, this is another reason why I don't like to sell, particularly on open or near after open, because the market can just do wild things. Share price of this company went as low as $30.76. So it's risen $2 from the low, and that can happen. Few things about Lovisa. So this is another company I own. Results on the surface look pretty good. So we're taught about significant increases in all their financial metrics, but this company is growing their store count throughout the world. So like-for-like sales were actually down 2%, if I remember correctly, but they also mentioned the end of the year was quite good. In fact, here it is. Comparable store sales down 2.2%, with improving trend through second half. So you have to take that into account. So if they weren't growing, then these numbers would be flat or even negative, but they are growing. You have to remember that. But on the flip side, the other thing you also should mention, they have a pretty high valuation or pretty high valuation metrics. Pretty sure the PE ratio of this company was like 50, which seems pretty high, but they have significant growth potential moving forward. So these numbers are higher. Now, the one thing I do think they were close to expectations. I actually don't know. They were close to expectations. I'm going to go to this capital brief. They would have mentioned Lovisa somewhere here. Lovisa shares dive on softer than expected start to financial year 25. Okay. So I'm wondering if the results were close to expectations. There we go. Meeting earnings expectations for financial year 24, but financial year 25 start has been softer than expected. And I think they might have said some numbers in here. Yeah, actually, in fact, they do. So City Analysis said they flagged that the first 8 weeks of financial year 25 like-for-like sales growth and total sales were 2 and 12.7%, lower than first half consensus of 3.1% and 20.2%. There you go. So it's just about the trading update this company released. It's not the results, the trading update. There you go. So let's have a look at the trading update. Now, this is their store growth, the stores throughout the world. So they have the majority of stores in the United States. So now United States first, Australia second. I think I was going to say South Africa third, but France has overtaken South Africa into third, and South Africa is now third or fourth, and United Kingdom coming in just behind, and then Malaysia is up there as well. All right, so the outlook, trading update, total sales up 12.7%, comparable store sales up 2%. So I do think the consensus was being a little bit too enthusiastic, but again, this company did have a pretty high PE ratio. So any sort of weakness in any sort of expectations, you will see the share price take a bit of a hit. Now, I have no inclinations to selling my position in Lovisa. I have not even thinking about it. I don't care that it is or could be a little bit overvalued right now. I'm just expecting significant growth in this company over the next 5 to 10 years. In fact, 10 years from now, this could be a massive Australian company if they succeed in their rollout plans throughout the world. There's no reason why they can't. Anyway, and if you do have a look at the chart, funny enough, the share price is exactly where it was back at the start of August. Share price on the 5th of August, that big down day, went as low as $30.82. Share price now is $32.87. So there was a run-up leading into these results. So it seems like the market was anticipating some good results from the company, and the market's been disappointed. So I'm not panicking yet for Lovisa by holding in this company. And to be honest with you, I'm not sure why I would panic. The market loved it when they released results in February, by the way. Share price went on a nice rally. So this was a breakout. Anyway, that's Lovisa. I've got 9 minutes left. This is SG Fleet. I'm going to have a look at just charts for these companies now. SG Fleet. Oh, yeah, it's interesting. We knew this already because of that Capital Brief article. And I would assume if you do SG Fleet, I wonder if Molly Fool made this mistake as well. Let's have a look. No, Capital Brief. They're just going to have Motley Fool. I love it when Motley Fool gets in a little bit too early. No one's been none of those journalists. Not even sure you can define them as journalists, but none of those Motley Fool writers probably even noticed. Maybe, I don't know. Anyway, so if you do, you can see it. In fact, it wasn't only on open. There was a little bit of rally in the share price of this company between 10:30 and 11:30. Geez, and then it fell away. That's really interesting trading when it comes to SG Fleet. If you have a look at the daily chart, share price in a nice uptrend, and this could have been a nice little, not breakout, but continuation if the share price remained where it was at the high of the day. Otherwise, Helloworld and Zip, we're going to have a look at these two charts as well. Helloworld. And this one is same as what's that other company I just mentioned, like 1 second ago? SG Fleet. The market initially liked it. Share price went to $2.44. Now it's at $2.11. So again, an initial positive reaction from the market. Share price has absolutely tanked. And this is, again, shows why I don't buy on open or after open, because share price has moved in the complete opposite direction than those retail investors who were buying. They liked the results, but the market, overall, the market has not. Zip. Zippity-doo-dah. Zippity-day. Yeah, down day, but again, this is not, it's sort of a negative day. Even the candlestick's a little bit negative. It has looked like it's bounced off $2, by the way. Let's have a look. Zip. I want to see if it stayed there. Yeah, 2.8. It's bounced off $2, but the trend is still up for Zip. And what else do we have here? AAL, Droneshield. Looks like Droneshield. Won't have a look at the chart for that. Well, yes, I will. We'll keep this fairly brief. What's this one called again? Alfabs Australia. Hasn't been listed very long. So nothing to take away from this chart or this company just yet. But Droneshield did release their results. And I don't think you can take much away from this company's results either. Even though share price is down, this company, it's all about the future. So results now mean really nothing. It's all about their results in 5 years' time. So if you think the results, this company could generate $100, $200 million of profit, maybe now is the time to buy some Droneshield shares, if you think that could happen. Now let's go back and let's have a look at the best performing companies today. Not much to talk about here. Nanosonics is about it. EVZ, fairly low volume there. It could actually drop 2 cents in the next trade. Early pay, no. Supply network, maybe. But that's a beautiful, I'll just have a look at the chart for supply network. Sequoia, maybe Woodside, People in, Guzman Y Gomez is now up. It was down at one point. In fact, I'm going to talk about Nanosonics and Guzman Y Gomez. Yeah. It may be Supply Network if I have time, but Supply Network, I just expected this from this company. I'm still not a shareholder. Don't know why. So let's have a look at Nanosonics. And again, I'm a shareholder of this company, and it's up 20%. So this is nice. And if you have a look at the financial results, again, on the surface, you're saying, why is the share price up? Here we go. So they do have this nice little table that I do search for. So they have the financial year 24, financial year 23, and percentage change. I really want to find that company who had the percentage change until earnings per share, which was just a total change. So if you have a look at the financial overview of Nanosonics, you might go, oh, horrible. So revenue down, or actually revenue up 2%. Gross profit up 1%. Operating costs up 10%, but operating costs higher than revenue increases. So that means the rest of the things you like to see, like profit and stuff, are down. So earnings before interest and tax down 54%. Profit after income tax down 35%. So you might be thinking, oh, this is horrible. But let's have a look at what Capital Brief says. I'm assuming just now. So here we go. Guzman Y Gomez shares tumble despite beating guidance. Now it's up. Is Nanosonics even in here? May not be. There it is. Nanosonics meets revenue guidance, shares lift. So that's it. They met guidance. Maybe the market was anticipating, even though they had some guidance out there, that Nanosonics would disappoint. So they haven't disappointed. So buy. Okay. And that's all she said. There's no analysis stuff here at all. Yeah. Let's have a look at the chart for Nanosonics. This is another case where I have not looked at the results. Apart from that table, that's all I looked at. And when you do look at the chart for Nanosonics, share price has been going sideways for 7 months. They released something really negative on the 24th of January. Share price went all the way down to $2.90. And since then, share price has been going sideways. Before the release of these results, it looked like possibly the share price was trying to break out back in the 15th of July, but that failed pretty quickly. And even though the share price is up 20% today, it's not really a breakout. So I wouldn't be getting too excited about this particular rise in Nanosonics share price. I'm going to have a look. What was the other ones I'm going to have a look at? Guzman Y Gomez and Supply Network. Guzman Y Gomez. I expected the share price of this company to be up today. So it was down for a period. I was like, that's interesting. The reason I expected a nice rally in the share price today is not the results. It's not the growth or anything like that. It's performance versus prospectus. When you see positive numbers there, the market should be more excited because otherwise there is potential that the market expected Guzman Y Gomez to beat prospectus numbers. If that happens, the share price might be flat or down. So that's possibly what has happened to Guzman Y Gomez today. But they have beaten their prospectus guidance. In fact, profit is 15% higher. Now, in saying that, it's a negative number. So this company is not profitable yet. So that's something you have to understand. Or no, that's statutory pro forma. Not sure what you have to. Statutory is reported, and pro forma is not really reported. But anyway, it's even if you look at the pro forma profit, it's fairly low at 5.7 million for a company that has a market cap. Was it 1.4 billion or something like that? What is a market cap? It's pretty high. 3.7 billion. Jeez. Oh God. Oh, sorry for the blasphemy. It's 3.7 billion. I did see an article that the market cap of this company is greater than Domino's Pizza and Collins Food combined. Let's back that up. 3.7 billion, 2.7 billion, and Collins Food. Yeah, that's true. Jeez. I don't know. In saying that, share price just keeps going up. I thought $30 was expensive. I thought the price they listed at, which was it $24, was expensive. And in fact, this chart looks pretty good, even though it hasn't been like 2 months yet. What date did it list? It listed on the 20th of June. So has been listed for just over 2 months. The chart is showing signs that I like. And I always want to wait for at least the first financial results if the company doesn't release a profit upgrade. And I have nothing to say bad about this particular chart. So the question is it overvalued? I think there's a lot of potential in terms of growth. That's what the market is thinking when it comes to Guzman Y Gomez. But some of those growth areas, particularly United States, are going to be really hard to crack. But if they crack it, maybe there is some value in Guzman Y Gomez. Okay, supply networks. Even though I've been going for over an hour, I thought I should just look at supply network. I want to buy shares in this company. Now, if you have a look at this, so you know I have been complaining about Mayfield Group not releasing presentation and media release, or Supply Network is released their Appendix 4E and annual accounts. That's it. But they are allowed to do that because this company is awesome. And they did a nice table near the start. Not the sort of table I want, a little bit more information I would prefer, but everything's up. So if you also go to the notes, that's way ahead of behind there. No, not. Everything's just moving in the right direction. Revenue from 250 million to 300 million. Profit from 27.7 million to 33 million. Earnings per share up to 78.61 cents. That's basic. So share price of this company is 28. So the PE ratio is getting a bit stretched, but they are growing at a nice clip, and there's no end in sight to this growth. Equity of 103 million. So return on equity, what was the profit again? So return on equity is really nice. So it's on about 33% or something like that, 31%. And cash flow, yeah. So operating cash flow is a little bit lower than last year, but that could be just changes in working capital, that sort of thing. If you ever want to check if it is changes in working capital, go to note 24A. Most companies should put a note next to the net cash flow from operations, and that note should be, what do you call it? I was going to say disaggregation. It's not disaggregation. It should be a reconciliation. Where are we? Oh, near it, 24A. A little close. Oh, missed it. Should be a reconciliation of the profit to operating cash flow. And we can see why there's a bit of a difference. So there is a difference. Profit, 33 million. Operating cash flow, 16.5 million. Why? And just by looking at changes in working capital, which is right at the bottom, changes in assets and liabilities, you can see there's been a massive increase in inventories, 24 million. There's also been an increase in trade and other receivables, 5.9 million. So combined, those two have a drag effect on operating cash flow. It's not a negative thing, but they will. Just imagine you have a business and you want to increase your inventories because you think next year is going to be really good. So you have to spend money. So you have to use the cash flow from your business to spend money to increase their inventory levels. So it seems like possibly that's what the company has done. Now, the other thing I should mention, there has been a decrease in trade and other payables. That is also positive. Well, that's negative because they did a little bit different here. Trade and other payables is positive number here. Well, that's decrease. Yeah, decrease is positive for operating cash flow. Okay. So, and the other thing you could do without looking at the note, if I can find it again, is you can just have a look at the balance sheet. There it is. Have a look at inventories. Inventories went from 79 million to 103 million. Well, that's a pretty big increase in inventories. And trade and other receivables went from 28 million to 33.9 million. So we already know that. And you can see an increase in trade and other payables. Yeah. So that's a increase in trade and other payables is positive for the cash flow. Increase in inventories and receivables or assets, current assets, is negative for the cash flow statement. I know. Okay, so that's all I've got to have for today's video. So more emphasis on the worst performing companies, more emphasis on those companies that, I've got 2 BHPs here. I could have put another company. Why are you allowed to put 2 companies into a watch list? That's ridiculous, Commsec. Didn't know that could be done until right now. Anyway, if you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it. Have a good day. Bye.